What's up, everybody? This is Jimmy with Trading Decoded. It is January 9th, 2024. It's 4:04 in the afternoon, and, two great up-running days in a row. Not quite as much as yesterday, per se, but still many opportunities to buy on the call side. And, opportunities also to the put side. Not something that I was recommending today. I am trying to teach people, to the best that my abilities, to learn how to trade conservatively before you try and figure out how to trade aggressively or risky by counter trend trading. There are people that make a living out there to counter trend trading. It's not that it's impossible. It's just that you're swimming upstream, right? And how many salmon die on their way for that swim? A bunch, okay? Go with the flow, guys. If you couldn't make money today in calls, you probably need to reevaluate and reassess what you got going on. Whether it's a bias and it can't go higher situation, or if it's horrible entries, or if you're getting into your moves too late, or whatever the case is. After the market decided to turn around and head north, i.e. just keep an eye on the cues and ADD, there was really no reason to play puts anymore. Now, if you watched yesterday's video, you would understand the fulcrum that I talk about and that I use, right? I don't use that because I'm saying you can't make money playing puts prior to making it to that point. But what I am saying is, when you feel like you want to play a counter trend trade, do something to remind you that you're going against the grain, okay? Try to talk yourself out of doing something risky and more into doing something conservative, right? It's a visual reference. It's a way to try and get you to stop doing what feels comfortable, because here's the thing, and I'm well aware of this. It feels more comfortable to buy puts when you're at a high of day. I get that. It feels more comfortable to buy puts when you're to buy calls when you're at a high of day, right? The move's going up, we make a new high of day, and you're thinking to yourself, oh man, this thing's going to keep going up. You buy the calls and nothing. Same thing. We're moving down. We get to a line of support. You want to buy puts on support. It's a new low of day. This thing's going to drop forever. Support holds. You lose your behind. Okay. It's more comfortable to trade what is really the riskier way to trade, right? I'm not denying that, but you've got to fix that. Otherwise, you're in for quite the ride, and it usually doesn't end well. Okay. So with that said, let's go ahead and launch charts, take a look at what was going on and how we were able to play it. So we had dropped pretty good from yesterday's levels all the way up here at 474.21 in after hours. Pre-market brought us down. And then, we did a live charting session today. Live charting session today gave us our pre-market lines right between 472.32 and 473. Only about a 70-cent range, and we were in it for a little while until we weren't. Our first target low was down here at 472.03, followed by 471.38, followed by 470.74. All of these are lines of support and resistance from yesterday, or previous trading days for that matter. Same thing with the targets to the upside. Okay. Now, call and put scenarios. Okay, where are my call and put scenarios? Same thing we do every single day, and then I explain to you where I base them on and why. Okay, my put scenario was if we can get below with a candle close this white line here, based on that one candle, I believe we'll make it down to 471.38. That's it. You either believe that and you take it, or you don't. But what I did say is though I'd prefer to buy a pullback to 472.03 so that if we take those puts, we could still get out at that line if it continues to hold this support with a profit. Okay? So there is two ways to play this. Either you waited for the break of that line and you took it, or you played the pullback hoping that this resistance was working in a downtrend, looking for the move to get at least to here, hopefully down there. Speaking of which, I was 3 cents off of calling the low a day with that line. Anyway, we took entries here. Now, where's my stop loss? Because truthfully, this was nerve-wracking trade. Because ADD was going one way, Qs were going another way. They were fighting it out, and we had to hold and wait and see who was going to win. You didn't have to, because there are some people who just stopped themselves out because they couldn't stomach the holding anymore. But where was our stop loss in this trade? Well, I'm going to tell you because you can't answer me unless you're talking to yourself. A close above this lower high right here would have been my stopping point. Do you guys want to take a look at how close that happened and how many times before we finally got the move? That is a nerve-wracking trade, okay? But still, the other problem was if you were waiting for a candle close below this line, then the trade was over by the time you were able to get in. You need to recognize that, okay? What you do not want to do is assume that the move is going to last forever, especially because you're in it, okay? Assume that support levels are going to hold this support. Do that. Don't assume that, oh man, the move's over, but maybe it'll go through this line and move to the next one. Maybe it will. But I could tell you more often than not, you'll protect yourself for the better by assuming that this line's going to hold as support. It's better to be assumptive on the safe side and be wrong than it is to assume on the riskier side and find out that that line does hold. Okay, because you know what you do? You get in this trade, your inputs, it makes it to that line, it holds, it turns around. You're not ready to give up yet because you have made the commitment that this thing's going to be valuable, this thing's going to move down, the pre-market's selling off, everything's good. I'm going to hold on to these. And you end up selling this thing way out here if you even sell it before it hits zero. That's what happens. You can't deny it. You can't argue with me about it. I see people do it all the time, and it's my job to prevent them from doing that on a daily basis. Literally, every day I'm trying to help people stop themselves from putting themselves in a situation to be in a bad spot, to fall weak to their weaknesses. Okay? In, out, banger of a trade. 40.5% if you got in anywhere around this line. The people who got in because we breached the line here, which was the first candle to do it, was right here at open, or not at open, but during the trading hours, also entered there and got, I think they got 10+% on that. Still, 10% trade in a minute, it's not too bad. 10% win in 1 minute. I don't know who pays that. Besides Spilita. Spilita pays that. And then we started to move up. Where's my call line? All the way up here. Why is it all the way up there? Well, because where else would it be? Let's have that conversation. Where else would it be? It can't be a break above this line. Why? Well, because you've got resistance shortly above that there, right? Right here. And if you take it from 18 to 32, that might work, right? That might work. But where does that candle close in order for you to take that trade, right? If it closes and there's less than 20% or 20 cents available to you, it's not worth it. And it holds resistance there at our pre-market low line. We come back down. And now the reason this is here is because I was explaining to people why you wouldn't want to play a break of the wedge to the upside or the downside, right? This is all happening in real time prior to us seeing what happens after the fact. Okay, guys? So for everybody out there who's saying or thinking, oh, it's really easy to talk about the chart after it's already done, all of this stuff is shared and put out there well before they become a situation. Okay? This is not after the fact stuff. This is all being talked about prior to happening. However, call line exists. Call line gets breached. Call line gets taken. Where does it go? Well, thank God for the 5-cent rule, but right up to the next resistance or 5 cents from it. That's where we were looking at. But you know what else that is also? See that lower high there? It's not an accident, folks. Every one of these lower highs is a potential problem for you on the way up. Every one of them. Don't ignore them. So, in and out. That there, depending on when you got in, was a 15 to 20% trade. Not too bad. Had a lot of one and dones this morning. Had a lot of two and dones this morning. You know, our community gets much quieter after about 10:15 because we are able to find very good paying trades quickly in the day, and that allows you to walk away and go enjoy the rest of your day, and or not put what you've already made at risk trying to trade more. However, we're going to talk about this trade. And again, line to line, we broke support, we got down to the next support. Okay, this time we break resistance, we run right into the next resistance. Not an accident. We break support, right down to the next support, break resistance, right up to the same resistance. Now, what happens the very first time we were able to get above these most recent resistances? Well, straight up we go. Straight up we go. Now, this is the high of day. This is the high of day. It's always more risky to buy the high day breakout. I'm not a huge fan of it. So what do you want to do? You want to wait for something that I call a break and retest. Now, we don't talk about this very often on this here channel anymore, but the reasoning behind a break and retest is that you're proving that resistance has been broken with a candle close above. Resistance has been broken. You're now proving that you've turned that resistance into support. That's a huge thing to have. It's telling you that the buyers were strong enough to take out the sellers, and now they're strong enough to turn that level of sellers into buyers, and so therefore we would expect the move to continue up. That's all a break and retest is. That's a 36-cent move. In you go, up you go, out you go with money. Oh, but Jimmy, you keep selling from line to line. Yes, that's my starting line. That's my finish line. I don't sprint through a race 10 yards. I don't start my sprints 10 yards before the start line and 30 yards after the finish line. And neither should you. Base hits, guys. Just had somebody share with me today what they did last month and how much they grew their account by taking simple 8 to 10 to 15% wins on their trades. It works, guys. This is the year of the base hits. Oh, but Jimmy, look at this move to the upside. Imagine if you would have held all the way down here. Okay? Imagine holding through these pullbacks. At what point do you say to yourself, well, I probably wouldn't have held through that? Be honest with yourself. Be honest with yourself. I know people panic in their trades. I know you do. Everything's hunky-dory while you're up in green, but this right here creates panic. I don't care if you got in down here. At some point you say, man, I've watched a lot of my already once had profit dwindle away to something way less. And then it teases you and say, oh, look, but maybe we're back up slightly less, though. Maybe it's going to go up from here. And then you get another pullback even deeper. And now you're thinking, fuck, I should have sold over here, or I should have sold over here at resistance, right? Don't put yourself through that. What's wrong with just taking the trade when you're supposed to and getting out at a point that you know might be a problematic area? We know it's going to be a bone of contention. We just don't know who's going to win the fight when we get there. Why deal with the fight? Why deal with the fight? Here are 3 trades that were high probability setups based on the chart, and all of them paid. Here's the 4th one. Close above resistance, retest candle, straight to the next line, followed by a huge rejection from that line. In, out. 40-cent move. That pays well. Okay? While we're talking around in here, I'm begging people, please don't play puts. Don't touch puts. There's no reason to say puts. There's nothing on this chart that's screaming puts to you. All right, Jimmy, well, where would you buy calls? Well, currently I wouldn't because we're kind of wedging to the upside. But I could tell you this, and this is word for word what I said. Go ahead and ask the people in here. Maybe somebody will comment and say it. I could tell you this. If I was in calls, I would not hold it through these double lines up here, especially the pink one. I said, I'm done trading for the day. So for me, I'm not going to be any trades. I don't have to worry about this, but I would not, I repeat, And this is down here while we're here because I was trying to get out for lunch around this time. If you take calls, which is what I would suggest instead of puts, do not hold through the pink line. I wouldn't. Pink line is the stink line. Well, I'll be damned. Oh, but look, Jimmy, it broke right through it. Yeah? How'd that work out for your call holders if you decided to hold through that? You better be fast with your fingers, man. Because no stop loss would have stopped out here. That happened so fast, it was ridiculous. And you know what else is funny? Can anybody take a guess at exactly what time I said I'm going to lunch? 1 o'clock. As soon as I walk away from the chart, it never fails. It's a running joke in the community. Boom, straight up to the upside. I think it was actually 101. Straight up to the upside, hits the target, rejects back down. So I wasn't here from 1 o'clock to 2 o'clock. So I didn't get back until after this move down, move up. But nonetheless, the support and resistance still works. Now, still, Jimmy, look at this. You wouldn't have played puts here? No. My put line was down at 472.50 right here. Right here. This is where I was interested at. Watch the video from yesterday. I'm not going to go over the fulcrum, trying to figure out where the middle is and all that stuff. Just watch yesterday's video. Maybe it'll give you some insight as to what I see when I look at the chart, especially zoomed out, before I feel better about playing counter trend. Because by the time it gets to that point, guess what? It's not anymore. It's not a counter trend trade. If you squish this chart up and take a look at it, that's a pretty strong move to the upside. And it's going to have to do a lot of work to convince me that the buyers are no longer in control. That level existed all the way down here for me. And as you could see, we didn't come close to that line. So puts were never a thing for me other than these opening ones here. Never. The word puts only came out of my mouth when I was begging people not to play them. Can you make money in this market, especially with some of these moves with puts? Absolutely you can. Counter trend trades, though, they could be difficult. They could be rough. They could be tricky. And when you get to this late in the day, things get real ugly when you start to get decent sized pullbacks against you, especially if you're playing 0 DTE, which is what the majority of us in here are playing. Okay. And if you're playing next day expirations, these moves don't pay you very much because, well, they're not moving nearly as fast because of time. You have the benefit of time, right? That's the way that works. If you want to make quicker money, it's going to cost you less because you don't have the luxury of time. Meaning, you buy contracts that expire today, they're cheaper. They're cheaper because your likelihood of winning is less than if you give yourself more time by buying a further out expiration. That's why that works, right? You're buying time, therefore you're paying more, which gives you more of a window of potentially winning. My window is this small, like this. I'm not looking for big moves. I'm looking for quick moves. And if you have position size in those quick moves, they pay very, very well. Okay. That is my style of trading. That's how I'm convincing other people in our community to trade, and they're finding great success in it. We also now have another live teaching or trading room that is solely based on the 920 SMA crossover strategy. He has a YouTube channel as well. It's called 920 Trading. He has a website, 920trading.com. Check him out. Paul is one of my moderators, a great dude, very good at trading in the 920. On nice swinging days like this, the 920 pays very, very well. It does. But there are just some people who don't feel comfortable, like myself, holding trades for long periods of time. I make quite the living trading quick 1 to 3 to 5 minute moves. And I'm done early in the day, which is the bread and butter for me. I don't know how many of you are going to continue to trade after you've made enough money to pay your bills. Why would you trade the rest of the day? And I can answer that too. The reason is because you're still convinced that more trades means more money. Doesn't. And we'll leave it at that. So I hope you all had a fantastic day today. And if you found any useful information in this video, please like, share, and subscribe. I'd appreciate it. If you'd like to join our Discord community, where there's a link down below, we would love to have you. Okay. We'd love to have you. Spend a free week there. Enjoy our content for free. If it's not something that you like, you don't have to pay anything. You've lost nothing. Cost you nothing. If you enjoy that content and you'd like to hang out with a bunch of like-minded traders, trading spy, just like we do here on these videos every day, simply become a paying member. There are perks to doing so. We have live charting sessions once a week, which we had one today. And we have after hours talks for members only, and a PDF library, audiobook library, all kinds of things. Okay. And yeah, check out our website, www.trading-decoded.com. And we're going to wrap it up. Hope you all had a fantastic day. Till tomorrow. I love you guys. See ya.